Alright guys, hello. Today we will be doing a quick video about the market maker model. Um we will backtest the GBP USD. And so the a market maker model is basically one of the best ICT strategy. So it's basically just need to wait for a PD array to hit and just do execution. So for example, this one, price just did the first accumulation, the original accumulation, second accumulation, or I mean the original consolidation, first accumulation, second accumulation, hits a key level, market structure shift, then retracement, then a continuation, then a stop punt, and this is where you frame your entry. Or yes, this is where you take trades. Alright, so this is GBP USD. This is in the H4 time frame. Let's see if we find any market maker model, market maker buy model. Okay, so this is external range liquidity in H4, external range liquidity, or ERL. So in theory, if price takes an external range liquidity, what it will do is it will retrace to a PD array, like a fair value gap, order block, mitigation block, you name it. Then it will continue. So that's the idea, that's the theory of the interaction between external and internal. Okay, so it hits an external range liquidity, and let's say fair value gap, retrace, then takes out another external range. It kind of looks like um, a market structure, but this is an institutional market structure, not the one that you say higher high and higher lows. This is a different, we're talking about a different market structure here. Okay, so as you can see, we have our swing high and swing low. This will be your premium and discount. Okay, so now we have an H4 order block, fair value gap. H4 fair value gap. Okay, so what I want to see is for the price, after we take out the external range, price should return here, and we will drop down to M15 to see if we can execute any market maker buy model. So let's drop down to M15. Also, let's find our New York midnight opening price. This is the power of 3. We'll try to use power of 3 as well. Okay, so let's see if price will go to the H4 fair value gap. Okay, so this is your your New York open, New York midnight opening price. Okay, so at New York midnight opening prices, this is where you buy below the NY open, sell above the NY open. But you just don't do that blindly. You need to know the narrative first. So if we have a buy model here below the N1, NY or New York midnight open, then that's a high probability trade. Okay, so as you can see, it's now in the H4 fair value gap. Now we want to see a market structure shift. Okay, as you can see, this so this is like a sort of an accumulation right here, and so these are M15 sell stops. Okay, those are M15 sell stop. Let's see if we have, after a sell stop, let's see if there's any sort of fair value gap, and boom, there you go. Just the M15 fair value gap. Okay. So we're in the H4 fair value gap. Price retrace to the fair value gap, and we want to see um a shift in structure, which is this one right here. Okay, this is a structural shift. And now what I want to do is we'll drop down to M5 to look for entries. And we are currently in New York. Let's New York session. So let's see if we can frame any trade. Okay, so first is, where's our draw on liquidity? Our draw on liquidity is, or the external range will be in here. Okay, this is your draw on liquidity. That's the easiest draw on liquidity, okay? So we're in the H4 fair value gap, external range taken out, fair value gap H4, price retrace, and in the M15, after price retrace, we have the market structure shift. There's also M15 sell stops that get liquidated, or this is like accumulation, manipulation, and expansion. So let's go into M5, see if we can take any entry. Okay, we have this failed swings and 5-minute right here that I want to see get liquidated. Okay. Okay, get liquidated. Okay, another liquidation. Okay. Sell stops. M5. Okay, boom. There we go. This one is something that I would love to trade live. Okay. This is the market structure shift. Okay. This is the fair value gap right here. That's a fair value gap. So we'll put a limit order this fair value gap stop loss just behind this order block, and take profit will be this drawn liquidity. Okay, let's see if we get tagged in. Place order. Oops, looks like we don't get tagged in. Okay, we're now in. By the way, I forgot to mention, in the M15, this is also in a mitigation block. This one is an order block right here, which is another like a key level that I learned from MMXM trader course. So this is a potential area as well. Just want to share. Okay, looks like we're about to get. Okay, we're about to get stopped out, but no, we don't. I don't think so. Okay. Price is moving slowly. Okay. It's choppy. Okay, at this point right here, probably set that to break even. And I'll take partial. Okay, that's a winning trade. So that's all, guys, for the market maker model. And thank you for watching. Hit like and subscribe. Thank you.